Hi there, happy Thanksgiving. This is a routine weekly traffic update for the week ended on November 25th. Prior to into the detail of the presentation, here are the disclaimer. Traffic light and capital appreciation point are the results of a proprietary risk analysis model and should be used as a part of your due diligence process. Crystal Clear Indicator is not a licensed financial advisor. Investing involves risk. Here the agenda. We'll review the traffic lights on S&P 500, Dow Jones, and NASDAQ Composite. And we'll be looking for bearish and bullish trades. Here's a traffic light S&P 500 on November 25th. The current light is yellow. The light turned from orange to yellow in early September. The status is the same as last week. The long-term indicator has shown less risk because right now, the indicator is in the yellow zone. Monitoring is still required. In 2000, the breach of the red line took several attempts. From the clip on November 18th, we compared the current situation to that of mid-2012. As the index attempt to make a new make a new high, it's making a higher low, and each pullback is less severe than the previous one. And as we are attempting to do that, there should be a pullback. And there's a distinct difference between now and 2012. The current PE on S&P 500 is about 25. And back then, the PE was only 14 to 15. And let's continue to observe to see if the current market shows similar traits. Let's look at the traffic light Dow, an intermediate indicator. This indicator has a good history showing intermediate bullish and bearish signal, especially when the bullish red line and bearish green line cross over and showing divergence. In 2010, when the red line made a new high, the green line stayed low, and the market ascends, as shown here. And in 2011, as the red line making a new low while the market is making a new high, this is a divergence, and the market has a correction about 20%. At the macro level, we see that in September, we see that red line reach an intermediate max or long-term resistance point. Okay. Also made a new high relative to May. Though the red line was descent but bounced off last week, and I'll zoom in the next few slides to talk about the bullish and bearish trades. Here are some bearish and bullish views. As the index, Dow Jones index making a new high, the red line is not, but the long trend still sustained because it's moving in the same directions. And if recently formed a W bottom, and the green line is continuing to, descend. Though there's a bearish divergence, potentially bearish divergence, I would say the bullish sign outweighs the bearish sign. We can see the similar events in traffic light NASDAQ. As you can see, traffic light NASDAQ red line made a new high, and it's catching up to the characteristic of a Dow Jones. NASDAQ is bullish and catching up to the Dow, as the red line make a new high relative to September. And at the same time, we had a bullish crossover, and the green line is concaving downwards. In summary, traffic light S&P 500 is in yellow. Traffic light Dow and NASDAQ shows more bullish and less bearish signs. Expect pullback as indices attempting to reach or stay in the new highs. Thank you for listening, and have a wonderful holiday.